Okay, so here's one of my losers from yesterday, APTV. This was not a good entry, but it was a good pick. And I think even more so when I'm analyzing this thing, this is a really, really nice trade to learn about like how long to hold a trade, when to let it go when it runs against you. Where are these lines? Because they seem a little arbitrary, they seem a little fuzzy. And this thought process or this tier of logic can help you decide whether or not to let go a trade or hold it and let it run longer. So your first line of support in this style of trading is the 5-minute chart. Obviously, you want to trade in the direction that SPY is going, and you want to trade relative strength. So, for example, on this day, which is a ridiculous day, what the heck is going on here? We have this big drop, then this big bounce all the way up. We're not quite at the 50 SMA yet on that day, and it looks like we just bounced off the bottom, and now we have this upsloping trend line, and it's very possible that we just come right back up and just mess around in here, in which case a relative strength stock has a good chance of winning. So we're up at the top through here. We've pulled back down to this position right through here, and APTV is still at the high of the day. Now, obviously in hindsight, there's some things that I missed. This weakness is nuts. This hammer, this engulfing candle, all of these things are telling me that I shouldn't have been in this trade. And on top of that, I entered right at the top on this thing, and the peak on this thing, I actually didn't wait for the confirm above this little trend line through here. So those were mistakes. Obviously, it's not a good trade, not a good entry. But the D1 is good. The chart is good. Because look at the D1 on this thing. It's an algo break coming all the way down from a long time. It's got great relative strength. It broke the SMA, gapped up today. It was still big in the green. It didn't really take a lot of beat down from that previous drop that we had near the midweek. It's got a lot of relative volume as well. It's actually a really nice long D1 chart. And I wanted to take this thing for like maybe 50 cents to $1, up somewhere around into this wick, no higher than that. Right? So that was my thesis. And obviously the 5-minute chart, I messed that up. I messed the timing up on the 5-minute chart. But am I screwed? Not necessarily. There's a lot of charts that you take or a lot of trades that you take that immediately go against you. Harry says that in some market conditions, almost 40% of his trades go against him. So how does he know when to hold them and how does he know when to let them go? Well, here's your next line of support now. So your trade has gone against you. What do you do next? Well, you know now that you're going to have to hold this thing for at least the rest of the day, or you're going to have to hold this thing for maybe even 1 or 2 or maybe 3 days after that in these market conditions. That's kind of arbitrary up to you, but you know your time span for this trade has increased. So what are your judgment conditions now? It's not the 5-minute chart anymore. It's the directionality of the trend on both of these, right? So what sort of indications would tell you that you need to leave your longs on SPY? Now you could use this for sure, but it hasn't broken this line up through here. It hasn't broken yesterday's low. And also there's no indication necessarily that it's broken the overall uptrend. This could just be a pullback still. So what you're gonna do is you're gonna find a line in the sand for the time frame that you need to work with. And on APTV, it's no longer the next hour. It's like the rest of the day or further. When you break that line, now all of a sudden going long and holding long, the potential for that goes way down. You don't want to hold a long when SPY now is confirmed in a downtrend. The second thing is APTV itself might no longer be relative strength. So if you zoom out and you take a look at the recent trends, the higher highs, the higher lows, all that type of thing, you draw a line up through here, which is basically this recent pulse up. You don't want to hold this thing on a pullback on that scale, because the loss might be tremendous. You're not going to wait till the SMA. That's a monster loss, depending on how much risk you've put in it, especially if you're looking for this type of gain. You don't want to lose that much on this stock. So you need to make sure that your line is reasonable. So this is the one that I chose, and the reason why I like it is the longer I hold this trade, the higher this line gets, which means the less my max loss becomes, right? So I have this line, and I have this line. If this line of support breaks, I'm out of my long. Or if this line of support breaks, I'm out of my long. Now, if this line of support breaks and this one doesn't, I'm still out of my long because this is the instrument that I'm trading. And that means it's probably lost its strength. So here's what should have happened. Let's say I mess up the entry. I'm holding this thing. I don't take the loss down there. I'm just waiting. No breakdown. No breakdown, hold the trade. Now, as soon as I see this line get broken, I lose the trade. But because we got this nice rally at the end of the day, my potential loss actually gets cut way back. I actually have this thing rally back in my favor a fair amount. Like, this loss could have been half as much as it had to. And then at the end of the day, I can decide based on what SPY's doing, do I want to take the loss on here because it's significantly less and no big deal and I can make it back easily? Or do I want to hold this thing longer term? Now this thing is still kind of technically valid longer term. Look at this pattern through here. Now, we could gap down. SPY's a mess these days, but we could finish right through there. And this thing finished green on the day. So now I have options. But instead of me freaking out, taking the loss, getting out because I think something's going to happen, wait for it to actually happen and then take the hit. Okay? So here's what you do. 5-minute chart. If you mess up the 5-minute chart and the trade's against you, expand your time range and take a look at the levels on the actual chart that you're trading and SPY on that same time frame that you're trading. That would confirm a reversal of the direction of your thesis. Hopefully that helps. It's a long video. It's a little bit wordy, but that is kind of my line of logic that I'm using to decide whether or not to hold on to trades longer term or not. And you'll find that if you apply that to a lot of your trades, the outcome is different. The ones you took losses on win, and the ones that you should have taken a loss on lose less.